Dear listeners, welcome back to this channel. Today we are going to solve one practical question about final accounts. So if the examiner is giving you this data, today we will be learning how to handle this kind of data in the exam question. So let's begin with this information. So our question is example 8.1. Before we start anything else, we need to just look into the requirement of the examiner. So it is here. Prepare an income statement for the year ended 31st December 2000 X0 and statement of financial position as at that day for S trader. So basically, it is requiring to prepare income statement and the balance sheet from the given data. The first trick of the exam is you have to identify each item belongs to which category or which financial statement. So let's begin introducing them. The capital introduced, it has a credit balance and it is an item of balance sheet in the equity side. The building, it's a non-current asset, 20,000 pounds. Plant and machinery, its cost value is 12,000. However, its accumulated depreciation is, as at 1st January 2010, is 1,200. Now, remember one rule. If examiner is asking you to calculate the depreciation of plant and machinery, then we have to see, is it on straight line method or diminishing method? If the method is straight line, we will consider 12,000 pounds because straight line method always consider the cost of asset as a base for calculating the depreciation. And if the examiner gives you the information about the calculation of depreciation of plant and machinery based on diminishing method, then we have to minus accumulated depreciation from the cost, and then we will get the remaining net book value. And then we will use that net book value in our depreciation calculation. So remember this trick. Okay, then we have the motor vehicle. This is non-current asset and its cost is 10,000. However, its accumulated depreciation till this date is 2,500. So again, the same trick will be applied. Mean the cost of asset minus accumulated depreciation. If the method is diminishing, we will consider remaining book value or net book value. Otherwise, if the method is straight line, we will use this information as a cost of vehicle to calculate the depreciation. So we will see this later. The inventory 1st January 2010 is given to you in the question. It is part of the income statement opening inventory because we will use in our formula of cost of goods sold. Okay. And then we have receivables. This is the item of balance sheet and current asset. This is basically our debtors. It has a debit balance. So we can see this is current asset account. Accounts payable, it is a current liability in the balance sheet. We will deal with this information in the balance sheet. The bank overdraft is a current liability and it has 6,000 balance as a credit balance. Then we have a long-term liability. It is a non-current liability in the balance sheet. So in the initial phases, we are just categorizing the items to different financial statements. Then now next is the sales revenue. Sales revenue is basically the item of income statement. It will be treated in the income statement in sales revenue. This worksheet will be helping you a lot that where to place the items. So let's keep identifying them. Purchases. Purchases is 96,000. So purchases will be used in the formula of cost of goods sold. Basically, the formula of cost of goods sold is opening inventory plus purchases. It becomes material available for use. And then we deduct the closing inventory. We get the cost of goods sold. This formula will be giving us the information or the final answer about the cost of goods sold. Now, if you look into the question again, the sales will be placed in the income statement as sales revenue 197,500 pounds, and then purchase will be used in the formula of cost of goods sold. Now, the next category of the expense is wages expense. It will be treated in the operating expenses of the business. And then office expense is also operating expense of the business. Heat and light is also operating expense. Rates, a municipal tax treated as trading expense. Again, this will be part of operating expense of the business. Transportation cost is also trading operating expense of the business. Marketing expense is also operating expense of the business. So a lot of operating expenses are given in this section. And now all the highlighted one, I am just highlighting them. These all are operating expense of the business. Now, once we are here, we will be placing sales revenue here, and then we will be calculating cost of goods sold. By deducting cost of goods sold from sales revenue, we will be able to calculate the gross profit. And afterwards, we have to deduct all operating expenses from the gross profit. We will be able to get operating profit from our income statement. If we get the operating profit, it is basically income before interest and tax. So I'm writing here income before interest and tax. This income will be deducting interest expense further, and then we will get income before tax or profit before tax. If there is any tax expense, we will deduct it, and then finally we will get net income after tax. So let's move back to the question statement. Here we go. We were on this item, loan interest. Okay, it is 800. If it is given in the trial balance, it means this is expense paid already. Remember this point. Insurance expense, part of operating expense, 2,400. Drawings, yes, it will be part of balance sheet when we will be using the formula of capital. Basically, opening capital is given to us in the beginning of the data. This is given 40,000. Then we will add net profit and then minus drawings. This will be the final closing capital in the balance sheet. So drawings 20,000 will be considered in calculation of capital account in the balance sheet. Now, students, please be focused on this point. If our trial balance has some information, these all are already the past data. However, when after the trial balance, some important informations are disclosed, we call them footnotes or notes to the accounts. It means these information must be adjusted before you make the final accounts. So each adjustment have two effects. Remember these important tips and tricks. Each adjustment given after trial balance will have basically two adjusting effects. For example, the closing inventory is given. The first effect of this is we have to deal the closing inventory in the income statement in the calculation of cost of goods sold. This closing inventory will be placed here. The second effect of this, we have to place this closing inventory in the current assets as inventory. Now, the second adjustment is depreciation. It is to be 10% straight line method on cost of plant. Yes, do you remember I have provided you the information? If the method is straight line, we will be using cost as the base to calculate the depreciation. So plant asset, look at the value of plant as a 12,000. So 10% straight away will be taken on this 12,000. And now we have another asset to be depreciated. It's given in the adjustments. So you can see 25% is the depreciation rate. Reducing balance method is used on motor vehicle. But here we have to be careful about the calculation of depreciation. Now, please look into the value of motor vehicle. Its cost value is 10,000 and its accumulated depreciation is 2,500. So once we deduct this 2,500 from 10,000, the remaining book value will be base for calculation of depreciation because the method is diminishing balance method. Anyways, let's go on. And the next adjustment is an accrual of 500 pounds is to be provided on transport expense. Okay, a few minutes ago, I have explained the transportation. If any value is given in the trial balance, it is already paid. So transportation expense was 3,000, it is already paid. But in the adjustment, there is an accrual item. Accrual means still payable. So 500 is payable. First effect of this adjustment is we have to add this into to the transportation expense. And then the second effect, we will deal it in the current liability. So 500 pounds will be part of the transportation expense. So 3000 plus 500 will be added in the income statement as expense. And 500 will be disclosed in the current liability because still it is payable. Let's move to the next and second last adjustment. The rates include a prepayment of 2,500 pounds. So prepayment mean you have paid this rents and rates in advance. So it means 2,500 doesn't belong to this period. So if doesn't belong to this period, it is prepaid. So what we would need to do, we need to just deduct this 2,500 from the expense of rents and rates. So just look into this expense category. So rents and rates are given 6,000. So 6,000 is paid, but out of this 6,000, 2,500 is prepaid items. So we need to deduct prepaid from this. And this 2,500 prepaid item should be shown in the current asset because it is a prepaid expense. And prepaid expense is a current asset item in the balance sheet. Okay. Then finally, we have this final adjustment, interest on loan at 10% per annum, payable twice yearly in arrears. So basically, if you just look into the interest expense in the trial balance, the interest expense is paid already 800 pounds. But if you just look into the bank loan information, it is just on my cursor. This was 16,000. Just look into this 16,000. So 16,000 times 10%, it means our interest cost is basically 1,600 according to this loan money, out of which we have already paid 800. So remaining 800 is still payable. So in the income statement, we will show interest expense total 800 this and 800 payable, total 1,600. But in the current liability, we will show only payables, which is still 800. So let's begin our solution. So here is the format of income statement. The title is given. The income statement is written for the year ending 31st December 2010. And then the first value is sales value. Let's place the values one by one from the given question. Here we go. We have first information about sales. So it is just right here. Yeah, sales value is given 1,905, 197,500. 197,500 is the value of sales. So it is given here. Okay. Now the next is cost of goods sold. We need to calculate this and we need an opening inventory. Let's move back to the question. Opening inventory was given to us in the trial balance. So 25,000 was the opening inventory and purchases were 96,000. So 25 plus 96,000. So I'm just placing the values. 25,000 is the opening inventory, 96,000 is the purchases. So if you add just purchases and opening inventory, it becomes cost of goods available for sale 121,000. And we need information about the cost of closing inventory. So closing inventory is given after the trial balance. This was 34,000. So this 34,000 place here, 34,000. Okay. And then how to calculate the cost of goods sold? It is equal to the material available for use minus closing inventory. So it is just 87,000. So the cost of goods sold is just 87,000. How to calculate the gross profit? It is equal to the sales revenue minus cost of goods sold. So this is 110,500. So this is cost gross profit. Very easy. We are just dealing the placement of these values because their identification is already done in our first half of the question. Now let's begin one by one to place the operating expenses. So the first operating expenses must be the depreciation because according to the sequence, we have to go one by one. Capital is not expense, building is not expense, plant is not expense, depreciation is expense. Now The depreciation of plant, it was 10% on original cost. Because its original cost is 12,000, we will just deal 12,000 times 10%. So let's calculate depreciation on plant. It was 12,000 value, and the depreciation is just equal to this many times its 10%. So I'm just calculating the values. So 10% is taken away. So 1200 is the depreciation for plant. However, there is another depreciation on motor vehicle. So I'm writing depreciation on motor vehicle. So because this was based on the diminishing method, so we have to deal with this little bit calculations. Cost minus accumulated depreciation 2500. So I'm writing here the motor vehicle, its cost is 10,000. Its accumulated depreciation is 2,500. And then if you deduct the 2,500 from 10,000, you get net book value. Okay, net book value is 7,500. Now it's time to calculate the depreciation. Okay, now it's time to calculate the depreciation on motor vehicle because it is based on diminishing method. So we will use this 7,500 as a value for depreciation. So let's calculate. It is 25% as given in the question statement. So depreciation on motor vehicle is 25% on reducing balance method. So let's deal with this. So it is equal to the remaining book value times 25%. So that's very easy to understand. So it is 1,875. So if you want to add total depreciation, it is just equal to 1,200 on plant plus 1,875 on motor vehicle. And then total depreciation becomes 3,075 pounds. Just place this value here in the income statement. This is just 3,075 pounds. So we've just placed it here. Okay. Now we need to deal with the rest of the operating expenses. Now we'll need to go back to the question. Here we go. We have dealt with the depreciation expense. Now let's move on one by one. Inventory is not an expense, receivable is not an expense, payable is not an expense, overdraft is not an expense. Say long-term loans, sales, purchase, we have dealt with purchase for wages. Now it's time to consider wages as expense. So wages is 20,000. So let's put this information in the question in the answer sheet. Wages is just 96,000. So 96,000 is placed. Let's move back. No, not 96, it is 20,000. So 20,000 is the wages expense. Okay. Now moving on, the office expense is 4,000, heat and light 5,000. Office expense 4,000, heat and light is 5,000. Okay. According to the next category, rates. Okay, rates were 6,000. But there was an adjustment on the rates that out of 6,000, 2,500 belongs to prepayments. If you look into this, rates includes prepayment. So it means out of 6,000, 2,500 is not this period expense. So we need to remove this. So rates is here. We have to calculate this rates calculations. 6,000 is the given information in the trial balance. However, 2,500 is the prepayments. What is the final money for expense to be reported in the income statement of this period? 6,000 minus 2,500. That's the income statement expense of this year. So rates are placed here, 3,500, just 3,500 placed here. Now, two or three more expenses are left to be categorized: transportation, insurance, and let's see. Okay, moving back to the trial balance again one more time. It's transportation expense 3,000. But remember, there is accrual of transportation in the adjustment that let's see how much adjustment is there. 500 pounds is to be provided on transportation expense. Accrual means this is still payable. So it means we have to adjust this transportation expense. Transportation, if we want to calculate the transportation calculations, 3,000 is paid in the trial balance given, 500 is payable. So total becomes 3,000 plus 500. So this becomes 3,500, the transportation expense. So let's put this 3,500 in this transportation expense here. So I'm just referring this 3,500 over here. You can see all the information are in the sequence or whatever the information we are adjusting side by side. One more expense, marketing, and then insurance. Let's see. The marketing cost is given in the trial balance 1,000 and insurance cost is 2,400. Straight away, we will place them there. So marketing cost is 1,000 and insurance cost is 2,400. Okay. Now, if you add all the expenses, operating expenses, just use the formula of sum. If you are using this Excel, all expenses are added here. It means total operating expenses are this. Operating profit you want to calculate. The gross profit minus operating expense will be giving you operating profit. So is equal to gross profit minus total operating expenses. So very easy. 68,025 pounds will be your operating profit. So one more information is left: interest expense. If you look into the data, interest was 800, but your loan money was 16,000. According to the rules or according to the given adjustment at the end, you are supposed to pay 10% per annum on 16,000. So if I calculate the calculations, 16,000 is the loan money and 10% is the interest on this. If you just calculate 10%, you are supposed to pay per year 1,600, but you have paid 800 only in the trial balance. It is given the trial balance. So it means in 800, we are paying, we have paid already, and 800 still payable. So net expense in the income statement will be 1,600. So we are doing bifurcation. 800 is paid, 800 is still payable. So it means total is 1,600. This is paid, this is payable. So in the income statement, in the expense category, we will write this 1,600 total expense. But when we will be presenting this data in the balance sheet, only 800 is current liability as a liability. So let's ignore this error. And now finally, we are here with the profit before tax. It is equal to profit earning before interest and tax minus interest. Then you get an operating income profit before tax. But there is no such information about the tax rates. So it means that tax information is not given in this question or in the adjustments. So we are assuming there is no tax rate given. So it is zero. If it is 40%, we will take the 40% of this before tax money. And finally, the net income after tax will be the same as profit before tax because the tax money in this question is zero. So the net income we just calculated is 66,424 pounds, 25 pounds, sorry. So that is what we were discussing about the income statement. We have done first requirement of this question. Please keep watching the videos. In my next video, we will be solving this same question for statement of financial position. We are just done with the income statement of this question statement. Thank you very much for watching and for watching the next question, the same question for balance sheet. Please keep watching the next video.